Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, if you are thinking that gold's just going to keep going down or the bond market's going to keep going down, you're going to get smoked. The data here, you guys aren't going to want to miss this one. It's pretty eye-opening. So let's dive in.
Trade Genius.
Hey guys, really briefly before we jump into this video, appreciate all the likes and subscribes, and if you can ring that notification button, that really helps us out. In addition to that, if you guys don't mind, head over to tradegenius.co, check out our specials we have over there. There's a number of different specials with different packages for all different experience types. If you're more into education, we have a package for that. If you just like to get into the room, primarily, we have a package for that as well, where you can see where we're calling out trades and things like that live, and also posting signals into our Discord signal rooms. So check it out, tradegenius.co. Appreciate you doing that.
Okay, Bob, gold's been going down, bonds have been getting hit, so the bears are out. But I just think that based on what we're going to show these guys, that is actually the trade that is really going to start to perform.
Yeah, Phil, I think we're learning something here about the way this market is positioning itself is that when these traders take these bear moves to the extremes, the snapbacks are absolutely astounding. We just had one in oil where oil has gone from $68 to $84 in 6 weeks because they positioned so strongly bearish. So we were looking around, guys, and we're like, is there anything else that's being positioned weird? And then I saw the silver commitment of traders report. We talked about that earlier this week. We bought some SLV actually. And then Phil's been looking around at some different ideas too. And we're like, whoa, when the gold commitment of traders now are starting to throw their shorts overboard too, Phil. I think we have a chart for that. And the last time that happened, gold went from basically, this is GLD chart, but it's to give good comparison, basically from 1,200 to 2,000. Not bad. And I think we're ready to make another move. And what's interesting to me about gold this time, Phil, is that it didn't really sell off this time. It's been fighting the down move with them trying to short the heck out of this. And I think now when they take their foot off the neck of this short position, I think we're going to see gold, we're going to go fly, and I think we're going to see another, potential 30-40% move higher in gold. And you have a really interesting chart too. Do you want to throw your chart up here and talk about that one?
Yeah, and the reason why not only is the short positioning favoring a short squeeze, but we also have the global positioning here on different things. And if you notice at the top there, bonds. Everyone is piling into bonds. Now, the bond market has been going down, obviously, but the way that people are positioning now is, there's quietly, buying the dip, so to speak, and the positioning has changed. This is positioning versus history. So you're seeing for August, just massive positioning into bonds. So why that matters for gold is this chart here. This is a golden bond chart. So bonds are in the candlesticks. Gold is that golden line. And the two yellow areas are our last couple of recessions. And if you notice there, recessions are good for both bonds and gold. The dot-com recession essentially kicked off a decade run on gold, and bonds had a really strong run off of that. And then if you look at the recession in the great financial crisis, after gold dipped into that recession, that's kind of what we're seeing here, and then another extremely sharp bounce out of that to finish off that decade-long run that started with the dot-com bust. So knowing that the positioning in bonds is incredibly high going into this dip, knowing that a lot of metrics we've shown you guys over the last few weeks and months are in recession territory, I think you have a really strong case here that gold, again, could have another extended rally from these levels. And especially if we go into what we've been talking about ad nauseum with yield curve control, I don't see how gold doesn't get to probably 10K.
Yeah, it's just amazing to me. We'd never seen basically an alligator jaw this wide before with these two assets.
Right.
And we talked about this earlier in a week too. We think I hate the word artificial because nothing's really artificial. I would just say that there are big bets being made now. Japan and China trying to manage their currencies by dumping the bonds. But at some point, the Fed is going to just hoover up all these treasuries out there because we can't be put in a situation where you are unable to make these interest payments and start crowding out some of the other investments. So we're coming into an election year. here. And I'm sure there's going to be a lot of pressure on the Fed to ease up on these short rates. And then I think you're going to see this bond market's just going to just snap shut in its relation to gold. But this time, I think they're both going to snap higher, Phil, just based on gold just not giving up the ghost this time. Here was another chart that I didn't get a chance to get to you ahead of time. It shows gold's performance during a credit event. It wildly outperforms to the positive.
Yeah.
When those things happen, 2000, 2008, in the 70s.
Yep.
Gold doesn't do really well if it's just minor selling, though, Phil. You talked about that before. You know, if liquidity drains, gold and silver miners and gold, they get pulled down with it because these are temporary events. But
Right.
when things get real, you know, people they race to gold and bonds.
Right.
And I think you're going to see that this time too.
Yep. And then we always get the question, you know, what about Bitcoin or crypto? You know, we haven't really gone through this scenario with Bitcoin since its existence. It was born out of the great financial crisis, and through the Fed's manipulation, we really haven't been allowed to go through a recession since then, which is odd because on average we get a recession every 4 to 5 years. So we're way overdue for that. And Bitcoin's never gone through that. So it's hard to say like exactly how Bitcoin's going to react. You know, if it's gold 2.0 type of asset, then it should follow along with gold in that respect. If it's a risk off asset, then it's going to more closely follow the equities. And the gold Bitcoin correlation goes in and out of favor. So sometimes they're correlated and sometimes they're not. So we just don't know. In any case, I think Bitcoin will outperform all of the altcoins. I think people aren't going to want to screw around with altcoins. They're going to stick with blue chip stuff and probably even Ethereum to an extent. And I think you're going to get like that alt BTC ratio is really going to get creamed as people just kind of zero in on the blue chips. So I do think, regardless of what happens, I think that the majority of the altcoin market probably takes a hit versus Bitcoin and say something like Ethereum. We always get that question and when we do these. I just wanted to address that on the back end. But anyway, guys, let us know your thoughts. Do you think we're crazy or do you think this makes sense? What are your thoughts on bonds and gold and how you're positioning in your portfolios? We'd love to hear. And that's going to do it for this video, guys. Have a great weekend. For those of you on the West Coast, stay safe. You got a big hurricane coming, and we'll see you guys on Monday. Take care.
Trade Genius.